Yeah. So two things. It's going to be harder than you think it is. And second, you should do it anyway, right? Like once again, there's only certain years of your life where you can do these things. Every year we get older. Every year we have more responsibilities. So I think what women tend to do a lot is, myself included, right? I have that tendency as well. We research, research, research. We try to be as confident about something. Like unless we know, 95%, like we have 95% confidence in something, we don't really take that next leap. That is just, kind of behaviorally, we are wired that way. That said, entrepreneurship is a lot about risk taking, right? So you need to be willing to take the leap, right? And you are never going to have all the answers. Nobody, even the best entrepreneurs, that out there, the most successful entrepreneurs who are out there, like none of them had all of the answers already answered at the time when they started their companies, right?
Hi, everyone. Welcome to CEO Unboxed, where we share raw and unfiltered stories of entrepreneurs and CEOs behind company headlines. And today, I have a very, very special guest to kick off Women's Month, March 1st. I have Nami Baral, who is not only a founder, she is a serial founder. She is also a mom and just amazing professional in person. And I'm so excited to dive into her stories, lessons learned, and share that with all of you.
Thank you
Welcome
so
to
much
the
for
show, Nami.
Thank you so much for having me. I'm so excited to do this, especially on March 1st, right? So, by the way, I guess like happy Women's History Month to all of us.
Absolutely, absolutely. Well, diving in, Nami, maybe you can just very briefly tell your story from early employee to starting multiple companies, and then we'll dive into some pieces of that as we
Yeah.
go.
Yeah, sounds good. So, actually, in the formative stages of my career after I graduated college, I used to be an investment banker. And, that was back in the day when, being an investment banker was all the rage, right? Everybody
Mhm.
wanted to do that. And so that's what I started doing. And it was a very interesting experience because in the particular kind of field of work that I was doing my investment banking kind of practice and experience on it was really geared towards some of these larger companies, right? Helping companies like Pepsi, helping companies like Google, Motorola do mergers and acquisitions. So got a tremendous amount of kind of financial industry experience from there, but I always I had always kind of felt like, it just wasn't kind of my personality to sit behind an Excel sheet all day. But I wanted to kind of, be in a field where I could actually build something new, right? Rather than just helping already kind of grown companies achieve more things or raise the prices of their stock. I wanted to build something new from scratch. So I ended up leaving my investment banking career to join a very early stage startup where I was tasked with building, I guess like the first version of their monetizable version of their product. And that company, once we built the monetizable version of that product, became so successful. We went from like zero to $100 million of top line revenue within like less than 6 months. And that growth got noticed with that company as well. So we got acquired by Twitter, and this was back in the day when Twitter itself wasn't even public yet. It itself was a relatively small company and a very different Twitter than we know today. So that's how my first, I guess, startup journey started. I joined as an early employee of another startup. It was not a company I had founded, but I was an early employee of. And then from there, the journey of startups, and then the entire tech ecosystem started accelerating, right? So after we were acquired by Twitter, we roughly about a year and a half ish in, the Twitter IPO happened. So then, Twitter became a public company, and I stayed at Twitter for another 6 years ish. and eventually leading revenue and product partnerships for one of their big, I guess, like cash cows, you can say, right? Like one of the most high revenue generating units within Twitter, which if you knew of Twitter or if you had been following Twitter for a long time, Twitter has never been that good at generating revenue, right? So we were actually leading a unit that was generating a lot of revenue for Twitter. So that was another, really interesting kind of experience in terms of growing in this trajectory from starting being an early employee of a startup, really growing the product out, growing the team out, growing revenue out within the startup itself, then joining another larger company, going through the ebbs and flows of the stock market as that company becomes public, and then really kind of scaling that globally, right? So around the time I left Twitter, like the unit that I was a part of was doing more than $1 billion of revenue every year, and we had people all over the world, right? US, UK, Korea, Japan, Singapore, a bunch of different places. So that was a fantastic experience. But the reason I left Twitter was actually, after being there for some time, you feel like you've done everything that you could have possibly done, and there was sort of nothing new to do anymore, right? Like it's a stagnated kind of experience. And I've always had this kind of builder mentality. So, I felt like, I should be in a building position again. And so I decided to leave Twitter and start my last company. So I'll pause there. I'm sure there are things that, we'll talk about this, like, I guess the new journey of myself as a founder. But yeah, it was a very
Amazing.
interesting experience just getting to that point.
Yeah, absolutely. And exactly, I would love to dive in there. Well, first of all, as you look back at now being on your second company, do you think that having that experience, either in investment banking, or I've seen that you did MBA as well, or that company, which one of those experiences would you say was the most defining to set you up for success as a founder?
Yeah.
And I guess, well, what did you learn there exactly?
Yeah. Yeah. I honestly think every person is a mix of the experiences and the decisions that they have made in the past, right? So it's funny because when I first, I guess I came to study at Harvard, I was initially supposed to be a pre-med student. I came on a medical research scholarship. And then for whatever reason, like, I got more excited by math, economics, all of the, the myriad other things. So I ended up kind of changing my track from pre-med to econ and math. And if I had not done that, my entire life would have been
Right.
so different today, right? Same thing in terms of like, me, when I was an investment banker, it was a really, really amazing position, and like, company that I was a part of was just amazing in terms of deal flow. So if I just gone down that path, based on just that skill set, I think it would be a very different journey for me today, right? But
Mm.
every kind of pivotal moment in your life, the kind of decisions that you make may seem like, just slight variations at that time, but overall, as they get compounded and compounded over time, it absolutely changes the trajectory, right? So for me, each and every one of those experiences are, definitely intrinsically a part of me. I'm a very analytical, quantitative person, and I got to hone those skills when I was an investment banker. I also got to really kind of look at the financial services industry so deeply from the perspective of
Mhm.
other companies that just had a lot going on, right? So that experience in itself was super helpful. It also prepared me for so many things that I got to do at Twitter once it became a public company, right? And then also the decision to join that early stage startup that got acquired by Twitter. I'd been an M&A banker before. I became part of like another kind of M&A where I myself was a participant, and I learned so much there that when my last company, the company that I had founded, Harvest, that was when we went through an M&A process for that company. I had just kind of so much kind of inbuilt knowledge from M&A from my prior experiences that I got to leverage that during that process, right? So I think ultimately, a lot of these experiences have made me who I am today. And without any one of these experiences, I think I'd be a completely different kind of person. So I appreciate them all.
Yes. And it's so, when you look backwards, right? And as you were talking about your journey, as they say, right, it's easy to connect the dots looking backward, but it's much harder looking
At the
forward,
time, yeah.
right, at
Yeah.
the time, right? And were each of these choices in your career building sort of very strategic, or was it just you were following your heart and passion? Did you
Yeah.
have this grand plan, or?
Um, you know, I always thought that I, liked being a builder, and that was always a kind of like so much of a part of me. That's just part of my personality that I knew that I would thrive in those kind of situations, and that's why I sought those situations. Did I know that I was going to start my own company and then start multiple companies and be in the fintech and AI space, or like build AI super agents from scratch? No, right? I guess you develop that kind of uh, I guess like when you work hard you get lucky, right? So I just worked hard in following the passions that I myself was very interested in, that I could really really give 200% to, right? So at that time it was I think a calculated risk taking, right? So for example, I'll give you an example. When I was in investment banker, I was on an H-1B visa, right?
Mhm.
And H-1B visa, as you know, right, is very much on, well, I was an international student awaiting an H-1B
Mhm.
visa.
Yeah,
So on
I've
F1,
been there.
right? Yeah. And then when I decided to kind of leave investment banking to this, literally at that time, that startup was generating zero revenue, right? Everybody was like, why are you jumping over the cliff? Like, this is too risky. You're an international. You need somebody who is kind of in a stable position, a stable employer that, so that you can maintain your visa and all of that, right? But at that time I was just so excited about building this cutting edge technology, and that startup did real time negotiations, right? So at that time I was like, you know what, I'm going to take this risk because I feel like this company is going to succeed. That said, right, like it was almost a stupid decision at that time
Right.
because I was on a visa, and going to a startup that was generating zero revenue was just reckless when I look at it right now, right? And
Mhm.
so at that time it was
Thank
just
God
like
it
I used
worked
to.
out, right?
Exactly. It has to work, right? So I'm going to work so hard that I'm going to make it work. Sometimes you have to just will things into existence. But, even I think there are certain things in life where your brain tells you one thing and your heart tells you another thing. I think you have to find a balance of these two things, right? So
Mhm.
the way I de-risked that decision at that time was I looked at all of the, kind of team members of the company. I looked at their entire kind of investor base and like the kind of portfolio companies that they had. I did so much research on the actual product that they were building that I kind of built an internal conviction that only I could, see the potential at that time, right? Because it would have been difficult to explain to anybody. All of my other international friends were like, this is career suicide. If your H-1B does not transfer, or this company goes under, you're just going to be in such a precarious position and all of that, right? But I felt like, I have done enough due diligence here. I think there's a high degree of this succeeding. If this does not succeed, and if my visa runs out or whatever, you know what, I'm going to take that chance, because in life you can't get anything truly kind of big done without taking big chances, right? So it was partially a leap of faith, it was partial calculated risk taking.
Right. But I think you said something that's very important, and I was surprised how few folks that I've hired as a CEO of a startup actually did this work. In a
Mm-hmm.
way, you have to approach a position in a startup like an investor, and
Yeah,
you are investing not only H-1B and other visa complications aside, you are investing your most precious resource, which is your time, right? It's more precious
absolutely.
than money. And once you have some money, you understand that the real the real scarce part is the time, right?
Yeah.
And so I think what you said was so true and so smart. And I think for folks out there who are listening, who are maybe early in their careers and considering which startups to join, maybe they're not ready to start their own. I think you have to think as investor. You have to look exactly as would you invest, quantify your time with thousands of dollars, right? And say, would I put in my thousands of dollars into this company, right? And I
Absolutely.
think,
Yeah,
yeah, what
like
you said was so spot on.
beyond just your time, right? Like you're also going to be spending some of your most like kind of youthful energy in
Mhm.
these companies,
Right.
right? And like I know as I've gotten older, I just don't have the same energy levels as I had at 24,
I know
25,
you
right?
can't pull all-nighters
Yeah, exactly.
2 3 days in a row. It doesn't work.
Yeah. And a lot of people, I think, tend to think about their jobs, whether it's at a startup or somewhere else, in terms of like, okay, what is the salary or what is the what is the actual kind of compensation opportunity? But more importantly, right, there's only like certain years in life where you're going to have a mix of you having the passion, desire, the energy to work on certain
Mhm.
things, and you having certain set of responsibilities where things are not holding you back and things like that. So you
Yeah.
have to pick your time very wisely. So think beyond compensation, right? Think about the experiences that you're going to get, so that that experience is always incremental to what you are going to be wanting to do next, right? So in my mind, I always knew that I was going to be like I was going to be a builder. I was going to start. I wanted to be in that position. So if I was not in a builder position, I proactively sought that kind of position out, and that's what led to kind of me moving from a very high paying investment banking job to literally like a huge pay cut and a really really risky for somebody who is on a visa to go into a risky startup, right? But that one decision has changed my entire kind of trajectory in life. It has, kind of it's jump started that experience of what I wanted to do in a startup, and I could not today, like when I think back to that decision, I'm so proud of my younger self to have taken that chance.
Absolutely. Um, and so if we go back to the time that you felt like you were ready, you're a builder after all, and you're ready to go and build on your own. So how did the idea come? How did you start talking to people about it? How you gain confidence that you are the one to make it happen? Tell me more
Yeah.
about that time.
Yeah. So it's interesting because I think the company that my last startup, when I started Harvest, it was definitely not the first idea I came up with, right? Like over the last several kind of decades worth of experiences that I've had, and like the career journeys that I've been a part of, I always had a lot of different ideas going. There's also a level of kind of experience and skill set building that you need to do, especially if you want to build something in the financial services or payment sector or AI, where you can't just create something that is very rough, right? Especially in
Hmm. Yes. You
financial
can't
technology,
win
you
it.
have
You can't win
yeah,
it.
yeah, you can't ruin it. It's you're in charge of something that is just so much bigger than yourself. So it cannot just be like, hey, let me just experiment with this idea.
Mhm.
So I thought and iterated over a bunch of different things, and the most important thing for me at that time were like two things, right? One, how passionate are you about this particular idea? Because beyond everything, beyond like the total addressable market or whatnot, like if you are not extremely excited about working for something without any pay, right? When somebody is not paying you, when you have to do the same thing day in and day out, day in and day out, day in and day out, what is the thing that you would actually be willing to do, right? I think that is super important. And then once you have that passion, you actually need to look at it from an opposite side, from a kind of an iterative data perspective, right? You cannot be married to the original idea. You need to be married to the concept of what you want to be building, what solution are you building, what is the problem that you're building the solution for, right? And are you passionate about that problem? But don't be married to the, okay, this is the solution and this is the only thing that I'm going to
Right.
build and this is amazing and whatnot. I don't think that approach works, right? So you have to be very open to testing your concept out, because ultimately, the what problem is it, and are you building a solution that can actually solve that problem, is the most important thing when you're doing any kind of company, right? Like whether it's a lifestyle business or it's a venture backed business, ultimately it needs to be something that works, gets product market fit, right? So I looked at it from the lens of, am I passionate about this idea? And second was, I looked at whether data supports my idea, right? And if data does not support my idea, does it support adjacent ideas, right? So let me give you an example. For example, when I left Twitter, initially the concept for Harvest was actually supposed to be a behavioral investment platform, right? I was thinking about it from like the perspective of actually, today's March 1st, so it's the right, I guess, like time to talk about it as well. At that time, I was looking at why are women not investing as much, like because within my friend circle, right, all of my guy friends were avid investors and would talk about stock market day in and day out, and all of my female friends, despite having really high compensation, high education, all sorts of things, right? Like these are Harvard graduates I'm talking about. They were either not doing any investing or leaving investing to like kind of to their fathers, or like to the male members of their family, right?
Mhm.
And it just was like a very interesting phenomenon to me because I personally don't operate that way, right? So at that time, initially, it was supposed to be, how can I figure out something that is going to be a platform that can help more women invest? And if this is purely a behavioral problem, then how do you change behaviors, right? So the initial kind of idea for Harvest that I left Twitter for was to build an investment platform that would help more kind of people on the fringe of the investment landscape come and become more active participants, right? um, and then that's what I left Twitter for. I started building the initial idea for that particular product because I was really excited about just bringing kind of more inclusive finance into the mix, right? And as I was building that initial product, what I realized was, once again, like in fintech, you cannot build, you cannot bring into market something that is extremely rough. So initially, I was just trying out with a small scope MVP of the product that I could actually bring with high fidelity to people, to testers outside, right, to users. And the version of that product looked like this, right? There was no trading activity or whatnot at that time because I was still awaiting licenses and things like that. So what I did was I built an MVP in which people would come in and link their bank accounts so that we can take a look at their transactions, and then we can classify or kind of give them behavioral nudges based on our understanding of their spending patterns and what they like to spend in, what things that they would be kind of excited about if they were to invest in these companies on their own. So that kind of approach was the initial MVP. And as I started getting more users for that initial MVP, it was, it was very limited scope, but I got users to try it out because they were just simply interested in seeing what their spending patterns were looking like. Right. So at that time, what I'd built was it was not an investment platform, it looked very similar to a budgeting platform, which I'd not encourage anybody to build. Right. But I didn't that was not the final product, right? The core insight that I got from the data that I saw from users using that initial MVP of the product was actually a lot of these folks had so much debt right? Like people, that you'd not anticipate to have a lot of debt, had a lot of debt, had a lot of unpaid fees, just a lot of credit card, just charges here and there, lots of overdraft fees, things like that. So that was a very, very surprising thing that I saw when I looked at the data. And then I realized before you can even get them to understand all of these investment concepts and whatnot, what if you can help them actually have more investment money, have more money to invest, right? And that way, I could actually ultimately solve that problem by just enabling people to have lower debt and hence a higher net worth that potentially can increase the savings that they can put
Right.
in towards investments. And that's how the original kind of AI super agent for financial negotiations was built. I realized that we could leverage AI to do negotiations in real time without any human in the loop so that it can actually be scalable for millions of people. And that's how we built the Harvest AI super agent. And that entire journey from starting as a completely different kind of trading platform as an idea to iterating it through the different kind of scopes of the product and ultimately landing on a product that actually did negotiations for financial conversations and just building that AI super agent. It was not very obvious to me when I had left Twitter that that's what the product was going to be. So I think you have to
Fascinating.
yeah, you have to have a very different mindset around let's not build just for the sake of you wanting to build something. It has to be supported by the data in the market and your initial users.
Absolutely. And Nami, so much to unpack there. I wanted to go back to some sort of earlier stages. And so, one thing you said was passion clearly, right? So, you really need to care about who you serve, right? And the broader mission of
Mhm.
what you're trying to do. And as you said, solution can change, right? I'm wondering from an evaluation standpoint of how did you know that that was the MVP that made sense? And how did
Mhm.
you get there? Did you try different MVPs and that one worked, or you felt like, tell me more sort of the nuance of sort of that thought process?
Yeah, absolutely. I think the initial MVP has to be something that is allows you to get initial hypotheses tested, right? So there could be many, many different kinds of MVPs that you could build, but I think it is important for you to, really kind of pinpoint here are the three things. Or two things, depending on your product, that when these questions are answered, I know exactly what to build for the next step. And these questions being answered are important for me to actually figure out if the next step is going to be successful. Right. So to me at that time, right, for example, building for a trading platform first meant that I could attract users to something that is like a financial product, right? Because
Mhm.
you cannot simply assume that people are going to come and try out a financial product in which you have to link your bank account. So it's a very sensitive step, right? And so first, is what you're building or is what you're offering something exciting so that people are actually willing to come and test it out while understanding that this is a very early stage product, right? So that was like one of the hypotheses for can I attract customers, is this something that I can I can get somebody without paying someone to use it, right?
Mhm.
So that's number one. And the second thing is a lot of that product was going to be built off of already existing financial data and leveraging AI on top of it. So what is the data that I'm going to actually be able to get, and what are the insights that we can actually glean from that data, and ultimately are those insights useful? That was the second part of my hypothesis at that time. So I built the MVP with the scope that allows us to answer those questions. There were so many other things, for example, if I thought about um, what kind of trading activities would my target customer segment want to get, then that would have been a slightly different scope of that product. But for me initially, right, even though the scope was more towards let's build an investment platform for women, um, at that time in the initial stage, it didn't matter, like whether it's a man or a woman, doesn't matter. Will I be able to get any customers to try this out, right? So the scope at that time was not limited to that target customer at all, right? So I think you have to kind of triage your product out for what is most important for that stage of the company, right? I was also looking at, I wanted to do a venture backed company, so I was looking at, can this be a venture backable business? So scale was super important to me. If I had kind of found out insights, but then later on realized that those are things that could not be automated by using AI, that you could only do negotiations over the phone and you'd have to use a human being, for example, I don't think I'd have built that product at all, right? So I think it really depends on what is it that you're looking to achieve at that particular time. For me, obviously, venture scale business was important, and those two hypotheses were super important to answer before I spent any additional time building further iterations of the product.
Yeah, and that's very insightful, Nami. And did you formalize these hypotheses? Did you share them with the team? Was it somewhere on your, I don't know, Miro board or whatever existed at the time? Where did these hypotheses were placed, and how?
Yeah.
And I think that's that level of clarity, right? I often say that at early stage, you're like a scientist. You have to prove or disprove hypothesis, right?
Yes.
And both answers are acceptable. You just need to know exactly what kind of hypothesis you're trying to test. So I'm curious if you have any tools or tricks for that early stage clarity.
Yeah. My like initially, and this is something that hopefully founders, or like people that are looking to be founders, will take away. None of this insight really comes like you just wake up one day and like have all of these insights, right? Like part of it is just like you just talking to as many people as you can, you just kind of building certain things and testing it out with more people, and then being willing to kind of change things as you go, right? So for me at that time, initially a lot of this lived in my brain, and initially I was very, very unorganized, right? Like I'm typically a very organized person, but at that time, like there's so many ideas and so many things that I wanted to do, and obviously not a really large team at that time, because even before you fundraise, these are the kinds of things that you have to do. So it was literally like me and one or two other people, right? So whenever we'd do these brainstorming, and we'd have these like kind of hypotheses written out in like in a whiteboard somewhere. But initially I wasn't that organized because there were so many things, right? But the thing that helped me get more clarity and organization is talking to other founders, right? And talking to other founders that are one or two steps ahead of you,
Mhm.
right? Who have just been through similar kind of experience as you, but have already kind of overcome that hurdle, so that they will be able to identify the pain points that you yourself may be experiencing and tell you how to get over that hump. For me, I don't think I've even said this to my friend Eric, but Eric Glyman, the CEO of Ramp. So we went to school together. I got lunch with him one day, and I was telling him about like what it is that I was trying to build, and you know and just telling him about like the entire scope of the product. And at that time he was like, he gave me this same exact advice, like you want to build an MVP that is functional enough that you're able to test your hypotheses, and like low scope enough that you can do it quickly so that you can iterate. Do not think about like building a full featured product in the very beginning, right? And as I was thinking about it, just during that like I think 30-45 minute conversation over lunch, like he helped me kind of gain clarity on really thinking very hard and long about what an MVP should really be, right? Because a lot of first time founders tend to think that they have to build a full featured product, bring a full featured product into market. Otherwise, people are going to think that you're a failure, or like you have not done kind of enough work and things like that. But that's not true. It's more important to actually figure out answers to your hypothesis, so that when you go to your investor next, they're going to ask you those questions, right? Like, what is it that what is the insight that has enabled you to gain the confidence thinking that this is a plan that is going to work, right? You need to be able to answer those kinds of questions. And so just having that kind of just clarity from having more and more conversations with people that are one or two steps ahead of you, I think is super helpful. First time founders also tend to think that, I've seen many of them, right? So not all of them, but many of them tend to think that idea is the most pristine thing. It needs to be closely guarded. Somebody might steal
Sign
the
my
idea,
NDA.
NDA, things like that, right? I mean, I was never in that camp, but I do see it in many first-time founders, and that is an absolute no-no. There is, if something has not been built yet, there should be a very solid reason for why that has not been built yet, right? You should always assume that in this world, there's somebody who is always smarter than you, and there are plenty of people who are not as smart as you as well, right? So just think that if the problem is in the execution, then it is something that you need to have a very clear idea about why you can execute it. But there might be structural flaws in the idea or in the market itself, right? So talking to as many people as possible to get that initial feedback, and ideally talking to other founders who are one or two steps ahead of you, helps you really hone in on the things that you're going to need for that next step in your product. For me,
And
that was the most important thing. Then any kind of organization board or Notion doc or whatnot, like talking to other founders, that helped me zero in on my MVP.
right. And I think what's important is that just you repeating that story that already forces you to be more precise and specific,
Mm-hmm.
but also getting that feedback, right?
Yeah.
Oftentimes we get a lot of value just by sharing, right? Your
Yeah.
pitch over and over and over again till it becomes, right, just really not only well rehearsed, but also amazing. And I think that just gains a lot of clarity for you. But I had a question. So B2C businesses, as we well know, even if you have fantastic idea, it solves a real unmet problem and all of those good things. Um, te- make or break based on cost of customer acquisition, right?
Yeah,
And
unit
so
economics for sure. Yeah. Mm-hmm.
and so I'm curious if in those early stages when you were talking about whether people would sign up, etc., were you also measuring like the CPA that you would have per sign up, and sort of how did you think about the unit economics? At what point did it actually come into the equation?
That's a great question. Yes, absolutely. It's at your early stage, you're not going to be able to have a lot of data points, but unless you run those kinds of experiments, you yourself are not going to really understand what it takes, right? So for example, I see founders who are in B2C businesses, for example, do something like this. Like, they build a product and they get all of their friends and family to do it, and they think their CAC is zero, right? And they don't know what the LTV is because they're not really tracking, when people actually fall off the radar, or they actually using it, or their DAUs or their MAUs, or is it something that people are not even using on a monthly basis, right? So the fallacy, I think, for B2C is, yes, you should absolutely test it out with your family and friends, but I think you should test it out in the wild, right? You should run, create a landing page, create a lead gen tool, right? And at this point, we have all seen really amazing examples of just like things that help you build those kind of lead lists, so that by the time you have a product, you have at least people you can reach out to,
Right.
right? But then this needs to happen in the wild, and this needs to happen through, my perspective on this is, this needs to happen through both paid and unpaid channels, right? So the thing that helps paid channels help you do is put a number against what is the actual cost of getting this customer, so it anchors you to some sort of data, right? If you just run it through unpaid channels, then of course there are other ways to measure it, right? Like, how much does it take you to get a partner? Like, time is money, and resources need to be calculated as well, and things like that. But ideally, if there's like a paid channel as well as unpaid channel that you're tracking against, then it anchors you to some sort of data that you can actually track day after day, month after month, right? And so that way you can have a very cohesive understanding of, okay, our CAC currently is this. We are doing it in a very small scale. Here are the experiments. Here's how we are, getting these customers. Now, if we were to expand it, if we were to 10x this, if we were to 100x it, if we were to 10,000x this set of customers, here are the channels that we have to go to, right? So let's say your initial client comes to you through Google keywords, and you only tested with 500 customers, for example, right? Then maybe you're getting those things for less than $5 per user at that time, right? But then there's an overall just 1,500 keywords per month, so it's a very kind of low occurring intent, right? So then that for that $5 there is a ceiling of just 1,500 users per month. Where are you going to get the next 150,000 users? For that, you're going to have to go beyond that channel, right? You have to assume higher CACs. Now you really need to understand, okay, within these different kinds of rising, customer acquisition costs, what is the actual amount of revenue you could generate repetitively from this customer so that it's actually worth it, right? So you can put more money towards this customer acquisition campaign. Yeah. And if you're able to at least kind of have a very, very good understanding of the numbers, it doesn't even, really matter what your initial experiment is. Because I think over time, as you do those experiments, your users are going to give you the feedback that helps you build the next iteration of that product. But you need to be able to get users that are going to give you unvarnished advice, right? Family and friends, great, but they don't really give you what you would need to hear at the process of building. So you need to make sure that you're capturing customers in the wild.
Right. And I think what's really important here is if you are seeing with your early experiments that, let's say, cost to acquire a customer is $500. And based on what you seek, how you benchmark and the value you create in the marketplace, you can make, I don't know, $20 from from a customer. Then you say, hey, yes, maybe I can get 500 to 100, or but my math doesn't add up, right? And so you have to really think, iterate through both the product, the business model, right, as well as the channels, and until those numbers get somewhere much closer to each other so that you actually have a business.
Absolutely, absolutely. And these days, obviously, B2C, especially after the ZERP era ended, B2C has been a tough thing to do, right? And obviously they need to listen to you because you had a product that you're not really charging the customer for, and you were able to scale it to so many more people and do that materially at scale, right? So they need to really, really understand and figure out how other B2C founders are doing these things as well. The only way you learn these things is honestly by speaking to founders, by listening to founders, by just I guess getting that insight from people who have done it before, because B2C and B2B is completely different, right? Like you may have an advisor who is a really amazing person at AWS, and they sell to businesses, but the product that you're selling is to consumers on a completely different category. So choose your advisors wisely and choose them based on the product that you have.
Wonderful. I know we have just a bit of time left here, but I think we paid our attention to B2C. I wanted to switch gears for a few moments talking about B2B. Did you purposefully go into B2B after looking at what it takes to build B2C? Sort of tell me more about kind of the problem, but also sort of the thought of, hey, now I've learned it. It was a good outcome. I'm happy, but many scars as any first-time founder, I'm sure you have. So I guess what are those scars, and how did it impact your second appearance.
Yeah. It just it wasn't intentional to build a B2B business. I always follow insights, right? So when I was building Harvest, the AI super agent for financial negotiations, we were looking at a lot of data, right? Like to build any true AI company, you have to just deeply understand the data and try to figure out, like, how to leverage AI to get really amazing insights and actions out of it, right? And at that time, what I realized is I was dealing with, an AI use case in financial services and in general in the financial industry. And we looked at a lot of transactional data. We looked at a lot of, kind of income related data, debt related data for consumers. And what I realized is at that time, anytime you look at any person's finances, right, the most important piece of data that you are going to need from that person is how much is their salary, in what frequency are you getting it, and who is it coming from, right? Because the risk of, like, who your employer is, how stable they are, like, their own finances is an important component. How much are you getting paid, in what form? Are you a W-2 employee? Are you a contractor, right? Like, there are things that you can't qualify for a mortgage, as a contractor unless you have 2 years of, like, 1099s, for example, right? But W-2s, right, you can qualify for a mortgage almost immediately if your salary and the credit allows it, right? So there were things like that were just like, if you needed to truly understand any person, you had to go straight to their paycheck, right? That was the most critical piece of information that we were looking for, and the entire financial technology industry was looking for whenever they were building any kind of products, right? Now the same thing applied to businesses, right? For a business, the most important cash outflow from their business is going to be in SG&A, right? And it is the most material expense for most companies out in the world. And that entire landscape is changing drastically post COVID, right? So because of, like, that understanding of, like, how important a payroll related data is, I was always interested, and really thought at that time that the next thing I'm going to do, or I'm going to be building, is going to be focused around, like, payroll data as the hub, right? And as I dug more into this landscape, I realized that all of these companies, like, the market leader, for example, currently is ADP, right? All of these companies, like, have been around for 80 years, has had this amazing piece of data, and also not just holding that data, but also holding the movement of that actual money, right? They have had this for so long, but the way their infrastructure is set up is they are just simply doing processing, but not really creating a system of record or creating an infrastructure that allows you to really smoothen that experience for both the employee or the contractor or the business. But then more importantly, there's so many other experiences that can be built off of that central data and system of record that they just don't have the infrastructure to do. Even if they wanted to, the way their rails are built, they cannot do that, right? And so I saw this kind of $1 trillion opportunity in, really building something that is applicable in terms of facilitating money movements globally for the most important payment for both the business and the employee or the contractor, right? And leveraging AI to streamline as well as introduce new workflows and new actions that can make the rest of their lives easier, right? So there's that was the initial kind of genesis of Neural. It was supposed to be, it's named after neural networks, and it is supposed to be a network of intelligent products that connect to this central system of record that determines somebody's financial identity. So that was ultimately, like, what I felt like I couldn't, sleep at night thinking about all of the amazing things that could be built with this infrastructure. Obviously, you have to build a payroll company first to realize some of the other efficiencies and economies of scale in that business. So that's how we ended up building Piro as the first product. But Neuro is an interconnected system of products that leverage AI to bring that financial identity, kind of to the world, right? So for me, it was more about like understanding the scars, I guess, like from the previous company. It was really leveraging the experience that I'd built from my last company in the B2C space, but more importantly, kind of really taking a hard look at the data and seeing what piece of data is the most important data that we need to build a platform, and to build a platform that can be generational, right? So, based on that, based on a lot of reflections over lots of months, that's how we came up with the idea of Niural. I didn't set out to build a payroll company. It is an AI company first and foremost, with an application in payroll.
And that's what it takes to be a successful founder, when you have dreams with payroll.
Exactly, right? Like, people tell me like, how are you so excited about, like payroll is supposed to be a very unglamorous, kind of boring industry, right? And that's, I think it has been that way because, the companies that are currently market leaders in payroll are not really building out any exciting products or doing anything interesting with this treasure trove of information that can really make the lives of employees and the businesses easier. But we have very, very different, differing visions. I think there can be a $1 trillion company that can be built in this industry, and so we are working hard to achieve that vision.
Yeah, and I think more and more people understand that not sexy, not boring places is actually where the next frontier of a lot of opportunities are, that
Yes.
are just don't have 67 competitors building building the same thing.
Yeah.
So that's very exciting. And um, last question, Nami. As I reflect, and it's interesting because both of us are immigrant female founders, right? Tech founders, and as I often talk about sort of female leaders, etc. I think it's there is a lot of talk about, right, that it's harder to raise money, it's harder to do 100 different things, perhaps both for immigrant founders as well as female founders. But in honoring the March months of women's celebration, what advice would you give to female entrepreneurs for getting started, and if that advice would be different for female than to other founders?
Yeah. So two things. It's going to be harder than you think it is. And second, you should do it anyway, right? Like, once again, there's only certain years of your life where you can do these things. Every year we get older, every year we have more responsibilities. So I think what women tend to do a lot is, myself included, right? I have that tendency as well. We research. We try to be as confident about something as possible, right? Like, unless we know, like, 95%, like we have 95% confidence in something, we don't really take that next leap. That is just, kind of behaviorally, we are wired that way. That said, entrepreneurship is a lot about risk taking, right? So you need to be willing to take the leap, right? And you are never going to have all the answers. Nobody, even the best entrepreneurs, that out there, the most successful entrepreneurs who are out there, like none of them had all of the answers already answered at the time when they started their companies, right? And even after you start the company, you're never going to have all the answers. You have to be kind of willing to take in and kind of live with that uncertainty, right? But you should also have a lot of confidence in yourself, right? Like, if you are already juggling so many things in your life, you will juggle one more, right? There's never going to be a perfect time for you to, like, okay, I'm going to have a kid, and then, like, I'm going to do this, and then maybe after that I'll start this company, or I'll take care of my parents first up until this time, and then maybe after that I'll do something, or maybe I'll become the VP here, and then after I'll do something. There's always these things that you can, like, say to yourself about just kind of pushing the can down the road. If you truly want to start something and you're passionate about it, right, that you then just take the leap, right? It's going to be hard, and it's going to be harder than you think it is, but it is also worth it, and you'll be able to do it.
Amazing. Thrive in uncertainty. Nami, that was so inspiring, insightful, and I appreciate your time. And for folks out there, you can see CEO Unboxed on the YouTube channel. We also live stream on LinkedIn, and then it's available on various podcasting platforms. So go subscribe and comment on the story, and follow Nami as well. She is active. I don't know, Nami, what's the best way to get in touch with you?
Yeah, I'm active on both Twitter and LinkedIn, so reach out to me at any time if I can be a resource for any of you that are thinking about, the next kind of next leap in your careers or your entrepreneurial journey, or just want to chat about all of these things. I also want to give a shout out to you. You are amazing yourself. You have built such great businesses, and I think what you're doing here, in terms of bringing the lessons from other entrepreneurs into this podcast, these are the kinds of things that I think help entrepreneurs really think more critically about how they should be starting their businesses or how they should be running their businesses. So thank you for taking the time to do this. I had a lot of fun.
Absolutely. It's a real joy to learn from you, Nami. Thank you, guys. It's a wrap, and see you soon.